Good morning. I'm Joanne Jobin, your host with VID Media, and welcome to the Arizona Sonoran Town Hall Forum. We're here this morning with CEO George Ogilvie and CFO Nikolakakis. The team will provide you with an update on the company's strategic milestones and work programs related to the Parks Salyer Project and the Cactus Mine Project. And now a few words about the company. Arizona Sonoran Copper's principal objectives are the identification, acquisition, exploration, development, and sustainable production of base metal properties in regions with low geopolitical risk. Their principal asset is the 100% owned Cactus Project, located in Arizona, approximately 70 kilometers south of Phoenix International Airport. Now, before we get started, I do want to remind everyone that if you do have any questions for the company, please place them into the Q&A tab at the top, located near your chat sections. We will answer as many questions as we can at the end of the presentation. And now I'd like to turn it over to George and Nick. Gentlemen, the stage is yours.
Great. Well, thank you, Joanne, and thank you to everybody for joining us today. The title of our presentation is Invest in Sustainability, Developing an Arizona Copper Mine to Supply the Energy Transition. Thank you, Alison. We do make some forward-looking statements, so I'll draw your attention to the cautionary language. This presentation is on our website, so please review that language at your own discretion.
Our current market cap is about 190 million Canadian. We have about 109 million shares outstanding, and on a fully diluted basis, we have just short of 118 million shares outstanding. We have an excellent and broad shareholder group with institutional support globally. Included in that group is Tembo, our largest shareholder, which is a private equity fund based out of the UK. And Rio Tinto is also a strategic investor into the company as well. We also enjoy the benefit of analyst coverage from 9 separate institutions, and with a current consensus target price of approximately $3.42 a share.
So as far as the management team is concerned, since we last presented some 6 months ago, we've continued to add to the project team. I'm delighted to say that acquiring Bernie Lawyer, who's a 35-year veteran and native to Arizona. Bernie spent many years with BHP at Escondida, which today is the largest copper mine in the world. He was a senior VP of projects with Torex and was, responsible for bringing the Media Luna project into production. And he's also spent many years with FL Schmidt on the processing side. So a very knowledgeable, well-experienced all-rounder who is now leading the site team as we advance through the PFS, bankable feasibility study, and of course into an EPCM decision. In addition to Bernie, in the last 12 months, we've continued to add positions. We've brought in a chief mining engineer, senior mine planner, a chief geologist, a chief metallurgist, and also a project manager. And the goal here really is to build out the project teams with the appropriate skill set so that when we do get to that decision on EPCM, we have the skill set within the company to help take it through EPCM and also construction and development and put this mine actually into production. Thank you, Alison. As far as the location is concerned, obviously, we are some 45 miles south of Phoenix. Phoenix has a population of 3.5 million people, including the greater area. We're well connected with roads. Interstate 10 is 10 miles to the northeast of the project. The Union Pacific rail line is on our southern border, which is going to allow us to bring in consumables and export out our copper cathode using rail, obviously from a greenhouse gas emission. That significantly helps us with respect to ESG. There's a main power line that runs right through the site, 115 kVA capacity, with more than enough excess capacity on it. And the good news is that if we so desire, we can draw 100% green energy from that power line as well. We're also some 5 kilometers to the west of the city of Casa Grande, with a population of 55,000 people. Pinal County is one of the fastest growing counties in the United States. So obviously we've got a labor pool there that we can draw upon. And you can see there to the south, we're about 75 miles north of Tucson, with a population of approximately 1 million people. Arizona ranks highly in the Fraser Institute investment rankings. In 2022, it ranked number 7. And of course, Arizona supplies over 70% of the US domestic supply of copper. And we believe that that domestic supply is only going to increase exponentially as there's a drive for decarbonization and a move towards more green energy. Thank you, Alison. So this is a photograph looking down on the site. Obviously, water in the US, particularly in the Southwest, is very critical. You can see here we have wells 5 and 6, which are historical wells that ASCU used when this mine was in production back in the 70s and 80s. The water rights allow us to take water at a rate of 3,800 acre feet per year. And when we look at our water balance, we believe we'll be in and around 2,000 acre feet per year. And of course, some of those wells are still active today. So we have piezometers and pumps in the wells measuring the volume and the flow rate. And we see an abundance of water sitting in the ground, literally 2,000 feet below our feet, so to speak. You'll also see that the site benefits because it's a brownfield site from some existing infrastructure, which we believe today would have cost us $30 million if it actually wasn't there today. You'll also have seen in the last 6 months that we announced the acquisition of Mainspring. We have an option on that property, and we believe that the mineralization from Park Salyer will ultimately extend south across onto the Mainspring property. And over time, we're going to have the ability to grow the resource on the southern extension of Park Salyer as we move on to Mainspring. What's also interesting, as you'll see there to the southwest, we have Robert Friedland and the Ivanhoe Electric Group with the Santa Cruz project. I believe today they announced a very robust initial assessment, or a PEA, on that project. And certainly, in my opinion, it shows the valuation differential between the two companies. And I think it would be fair to say that Arizona Sonoran is very undervalued. And as the company looks to transform over the course of the next 6 to 12 months, I believe there's going to be significant returns for the shareholders of the company. Thank you, Alison. So on to permitting. Again, we've made further advancements there in the last 6 months. In April and May of this year, we announced that we had received the mined land reclamation permit and the industrial air permit. These were the final permits required for the Cactus Mine as per the PEA that we put out a couple of years ago now. So in essence, the Cactus Mine is permitted. However, the PEA did not include Park Salyer. And of course, we're in the process now of working on a pre-feasibility study that will incorporate Park Salyer. So our plan of action is late this year, once we have a line of sight on the pre-feasibility study, we intend to amend some of those permits to obviously include Park Salyer. And usually in a mining scenario, obtaining the original permit tends to take a little bit longer than an amendment to a permit. So we would expect, at least by the third quarter of next year, with these applications for amendments in to the various state regulators, we would expect to have the amended permits by the third quarter of 2024, well in advance of the BFS being completed and a decision as to whether we move into construction and development. Thank you, Alison. So a little bit more on that timing. All of the infill to indicated drilling required for the PFS was completed in April of this year. Since then, we've kept a couple of drills turning at the site as we do infill to measured drilling in and around Cactus West and Cactus East and at Park Salyer. And you should start to see some of those assay results coming out in the next several weeks through till the end of the year. That drilling is only required for the second half of 2024, whereupon we'll be looking to produce a bankable feasibility study. The pre-feasibility study remains on track, on schedule, on time for delivery in the first quarter of next year. And at that point in time, as I've stated, we'll then move immediately into a feasibility study, which we would anticipate being completed at the end of 2024. With the permits in hand, as I discussed on the previous slide, we'd then be in a position as to whether we wanted to decide to greenlight the project and move into construction and development. We're still anticipating an 18 to 24 month construction and development period. And if we could start, moving earth early in 2025, we would envisage seeing first cathode before the end of 2026, which in mining terms is relatively short. And of course, if you look at most of the supply and demand fundamentals that most of the analysts and people in the space are predicting, there starts to occur some significant deficits from the year 2026 onwards. So our timing on bringing cathode to market actually could be extremely good in this situation. Thank you, Alison. So this is the public resource that's currently out. I mean, you can see here between the indicated and inferred resource in totality is about 4.7 billion pounds of copper. We're currently right now, as I said, rerunning an internal resource on Park Salyer, given all of the infill drilling is now sitting with the company since the end of April of this year. And we're certainly seeing in the core of Park Salyer, the tonnages are more robust than what we had previously reported within the maiden resource last year. So we think when we come to update the resource for Park Salyer, we're expecting to see an increase in tons with no depreciation in grade, which therefore means we should be adding some significant pounds of metal in the ground at Park Salyer heading into the pre-feasibility study. So we're certainly excited about that, and we'd anticipate we should have something out before the end of the year as far as the resource update is concerned. Thank you, Alison. If we look at developers actually in the US today, you can see that we think Cactus actually sits quite well with some of the top 10 developers currently within the state as far as tons are concerned and as far as grade is concerned. Of course, within those grade numbers, we obviously have an open pit that grades anywhere between 0.35 and 0.45% copper. And we obviously have a surface stockpile of approximately 90 million tons at 0.17 total percent copper. If you take those numbers out of the equation and just focus in on the underground, you'd be looking at grades slightly in excess of 1% copper. So that certainly puts us on a par or very close to a par with Santa Cruz and the Ivanhoe Electric, which will be underground mining. Thank you, Alison. So the PEA went out in August of 2021. At that time, we had an NPV 8 after tax of $312 million US. Bear in mind, the financial and economic model only used a copper price at the time of $3.35. And most people are forecasting long-term copper prices of somewhere in and around $3.75 to $4. And the IRR after tax was 33%. Of course, the production profile at that time was only 28,000 tons of annual copper cathode production, or 56 million pounds of copper produced on average over an 18-year mine life. With Park Salyer now coming into the equation, the guidance that we've given to the project team and the consultants is trying to achieve a 45 to 50,000 ton cathode producer annually, or 90 million to 100 million pounds of copper production annually, and a mine life in excess of 30 years. So it's almost a doubling of production and a doubling of the mine life. And we believe that once that becomes public, it will be quite transformational for the company as far as the valuation is concerned compared to today's levels. Thank you, Alison. So a little bit more obviously on the metallurgy. For 2.5 years, we've been conducting metallurgical testing. As a recap, the oxide leachable material sees recoveries in excess of 90% after a very short leaching cycle, anywhere between 60 to 90 days. On the secondary sulfide, which we'll be leaching as well, we're seeing recoveries between the mid-70s up until the low 80%, and the recovery time there is anywhere between 200 and 220 days. So we're continuing with metallurgical testing on Parks-Salyer. Those columns are now being pulled down ahead of the pre-feasibility study. And of course, we did announce several months ago that additional met testing has now started in advance of the bankable feasibility study towards the end of 2024. Thank you, Alison. So now we look at the top 10 copper producers today in the US. And of course, we're comparing ourselves at a 90 to 100 million pound or 45 to 50,000 tons of cathode production. And if we can actually achieve those numbers, we would be sitting somewhere in and around the top 10 of current producers. And as we showed earlier, in totality, our grade is going to be around a 0.5 to a 0.6%, which actually sits quite well compared to producers in the United States today, certainly at the top end of that grade scale. And as I said earlier, if you take out the surface stockpile and the open pit and just focus in on the underground, you're looking at grades that will be around 1% copper. Thank you, Alison. So looking beyond the base case, obviously several months ago we announced that our met testing with the Newton technology had been advancing well. These tests that went out were after 75 to 150 days of leaching time, and we were seeing recoveries in the columns anywhere from 61% up to 81%, which actually is very good compared to the original range that we were given by Newton. They predicted that we should see a 72 to 82% recovery, but the leaching time required for that would be somewhere around that 200 to 220 days. So obviously these columns continue to be leached today. I would expect by the end of the year, when the columns are at 250 to approximately 300 days of leaching time, we will then announce what the final leaching results are towards the end of the year, and obviously going into early 2024. Now, bear in mind, with a global resource today of 6.5 billion pounds of copper in the ground in all categories and mineralization style, there's 1.7 billion pounds of copper in primary sulfide that is not currently part of the PEA or the pre-feasibility study that we're going to see coming out sometime in that first quarter. So again, if the technology works and we're able to negotiate a fair and reasonable commercial agreement with Rio Tinto, there's an ability to bring in substantial additional copper, increase the production profile and the longevity of the mine in Arizona, all on private land with access to water and water rights to the year 2070. Thank you, Alison. On to exploration, and just a recap here. Obviously, we drilled a hole out on the northeast extension earlier this year. We were targeting a former ASCU hole that had seen 47 feet of 3.5% copper. We were trying to replicate that hole. The hole that we drilled didn't see 3.5% copper, unfortunately, but we did see 997 feet of continuous mineralization, including oxide, enriched material, and primary sulfide. So obviously the northeast extension needs to be followed up on as far as exploration is concerned. We also know that there's a 1 kilometer strike length between Park Sailor and Cactus West that was never fully explored by ASCU. And our intention is to poke in some deep holes there, looking for mineralization at depth. And then, as I referenced earlier, we believe the mineralization from Park Sailor will extend over the property boundary onto the mainspring property. We know that because ASCU drilled there 3 to 4 decades ago, and we have access to some of those historical holes which show mineralization was encountered. And we also know that Ivanhoe Electric drilled approximately 12 holes out there and also hit mineralization when they had an option on that property approximately a year ago. So I think there's definitely opportunity there for further exploration success and to ultimately grow the resource at Park Sailor and the extension to Park Sailor. Thank you, Alison. Nick?
Yeah, just looking at our peer benchmarking, 2024 is just around the corner, and it's a very, very exciting year for Arizona Sonoran. In approximately 6 months' time, we'll be releasing our pre-feasibility study, and later in the year, we'll be releasing our definitive feasibility study. And we also hope to announce a fully financed project at some juncture in 2024. This slide actually shows where we sit with respect to our peer group and with respect to where we are in our life cycle. It's not uncommon as you're preparing a pre-feasibility study to have lower multiples reflected in the share price, but we think that's going to change in short order. As George pointed out, our current NPV is 312 million and 28,000 tons per annum in our PA, but we're expecting that to materially increase when we give the world the first glimpse at our PFS. And as we do that, and as we move closer to construction, we're also hoping to enjoy higher multiples, and that's certainly been the case with our peer group, and we expect that we'll enjoy those as well. As you can see with Foran Mining, they're in the construction period, they're fully financed, and they've enjoyed higher multiples. And Arrow Copper is further advanced. It's an asset fully in production. But it's good to remember that each of those companies started right around where Arizona Sonoran started, and we think this is an excellent entry point for investors. Next slide, please. I wanted to really demonstrate vis-a-vis our peer group where we trade. We're currently trading at a 0.3 times NAV. As I briefly mentioned, it's not uncommon for that to be the case, but it's also very common for that to change as we move towards a pre-feasibility study, which is a short 6 months away, 6 to 7 months away, and later on the definitive feasibility study, and then a fully financed project. We are expecting our multiple to increase materially from that 0.3 times. And why is that important at this stage? We obviously think it's a very compelling case for investors, given that the PFS and the feasibility study is just around the corner. Next slide, please. This is an interesting slide. If you look at the left-hand axis, that's the enterprise value represented by the bar graph. And those little diamonds actually demonstrate annual production. As George mentioned earlier, we're targeting annual production of somewhere between 80 to 100 million pounds per annum. So if you look over to the far right there, we firmly believe that the enterprise value will start to increase materially as we start to demonstrate not only the production profile, but the economics. But where our asset actually is different than our peer group is two things to mention. Number one, we're in a fantastic jurisdiction in Arizona. We have incredible support from the local communities and both federal and state officials. And number two, our project is a low capital intensity project. There are many copper assets out there, but very few that are in a good jurisdiction and have a very low capital intensity. And that's Arizona Sonoran. That's why we believe our project is compelling. It also, of course, allows us to move into production much more quickly than some of our peer group. Next slide, please. Again, this is just a slide to demonstrate where we sit with respect to our peer group. Again, not only do we have an exceptional project, we have a project that has a manageable capital structure. We believe that we're on a good path to getting it financed. And in fact, we've received a number of inbound calls already from lenders willing to provide us capital, primarily because the project is a good project and it's in a fantastic jurisdiction. And as I previously mentioned, it's just around the corner. We can't stress this point enough. If you look at the current share price, it's obviously a function of the copper price. The fundamentals for this commodity are very, very good, particularly if you're a believer in electric vehicles. And we are very well positioned to enjoy that upside, not only with respect to the underlying commodity, but by virtue of the fact that we're moving the project into feasibility study and in short order into development. Thanks, Al.
Thank you, Nick. So just to recap, I mean, obviously it's a brownfield site. We're in a tier 1 jurisdiction, obviously in Arizona. The product will ultimately be a grade A, LME grade A copper cathode that's going to go right into the US domestic supply. We believe there's going to be significant demand in the coming years and decades. We have 100% ownership of the land, almost 5,400 acres. And of course, it's all private land, so there's no federal nexus. We're only dealing with the local, state, and municipal authorities. And we've had a great relationship with them, and we maintain a very, very strong social license with those groups. As Nick stated, you know, with a heap leach technology, solvent extraction electrowinning plant, and the fact that it's a brownfield site, it gives us a very low capital intensity per pound of copper, ultimately, that we're planning to produce. And if you think back to this project when it was acquired from a state trust in late 2019, which is, you know, barely 3 years ago, the initial resource was 284 million pounds of copper sitting in a historical stockpile. And today that resource publicly sits at 6.5 billion pounds of copper in the ground. And we believe with the next resource update, that number is going to continue to grow. And I think you'll have seen from the presentation that there's still lots of exploration upside, both on our own property and probably within the region. The other key thing about the company, and we obviously don't like to, you know, blow our own trumpets, but you have a management team here that has a proven track record of delivering exceptional results for the shareholders of the company. And we see no reason as to why we're not going to repeat that with Arizona Sonoran. And as I said earlier in the presentation, you know, in business, you know, timing is everything. Sometimes you need a little bit of luck, but we certainly believe our timing on bringing this project into production and what is happening in the world, not just in China, but in the world with decarbonization and the drive for green energy, it's going to increase the demand for copper. And the supply constraints that we've seen to date are only going to worsen. And that's going to create significant value accretion for companies in the copper space, and particularly those in production generating revenue. So we think we have a particularly bright future, and our Arizona Sonoran shareholders will do extremely well with this company over time. So that concludes the formal part of the presentation. And Joanne, we're happy to open up the floor and take questions.
Great. We've got quite a few of them here, as you can imagine, and people have been actively upvoting. So let's go by order in which they wish to hear the answers to the questions. So someone is asking about more color on the Park Salyer permits, please. Now, I know you talked about it a little bit, but maybe there's a little more information you can provide.
Yeah. Well, look, first of all, water is extremely important, given we're in the southwest of the US. The permits that we have in place are already applicable for Park Salyer. So we have water rights until the year 2070. We will, however, have to amend the aquifer protection permit, the mined land reclamation permit, which really deals with closure plan and bonding, and the industrial air permit to accommodate Park Salyer. Now, as I said earlier, we have the original permits in place for Cactus, and usually when you apply for an amendment, it's much easier to obtain an amendment. And just to recap here, those amendments follow the same process as the original permits that we've received for Cactus. So we make an application. Once the application is administratively accepted, and it can take days or weeks to have an application administratively accepted, but once that occurs, it starts a clock ticking, and within 6 months, the state or the municipal regulator must give you a response to your permit. So because there's no federal nexus here, it really streamlines the timelines in obtaining these permits, and we can actually plan for having the permits in place. And, we believe that those applications will go in late this year, early next year. Within a month, they will be administratively accepted. The clock starts ticking, and that's why we say the Park Salyer amended permits or for the entire project will be in place for the third quarter of next year, well ahead of the BFS and a construction and development decision.
Great. So, of course, there's questions now regarding Ivanhoe, your next door neighbor. So their recent acquisition of 6,000 acres of surface and water rights, does that lower the level of urgency that people are maybe, wishing and hoping on, as they say in the vernacular, shipping the two of you together or not?
Well, look, I mean, if you look back to that deal which they did, basically Ivanhoe Electric paid $25,000 an acre for the surface rights and the water rights. If we apply that same math to Arizona Sonoran, if we have 5,400 acres of land with water rights to the year 2017, it's all private land, at $25,000 an acre, that tells me our land value alone is $100 million US. And we're sitting today with almost $18 million US cash in the bank. Yet the company only has a market cap in US dollars of 110 million. So where is the value for the 6.5 billion pounds of copper that's actually sitting in the ground today? This is why this is such a great entry point to get into this company if you can pick up stock at $1.55, because it's only going to go one way once that transformational PFS comes out, once we release the resource update. Perhaps there's some other news that'll come out with respect to the Newton and how that test program is actually proceeding.
And I expect you will have some good news flow over the next quarter or so.
Yeah, exactly.
And I don't mean good, but I mean like a good amount of news flow. Let me rephrase that.
Yes, exactly.
Great. One more question on Ivanhoe. Of course, as you mentioned earlier, they had their own conference call earlier today. Apparently, they released their PFS with an initial capex of 1.15 billion with 57 KTPA. How does that compare to what you think your actual costs will look like compared to Ivanhoe, or is it even too early to comment?
Well, we did see, obviously in our PEA, we were looking at an extremely low capital intensity. The production profile is going up. And of course, we're in a high inflationary period compared to, mid 2019 when that original PEA, went out. But I would still expect that from a capital intensity, US dollars of capex per, kilogram ton of metal actually produced in cathode, we will be at the lower end of the scale. And certainly we want to be in a position that the capex on this project is something that we ourselves can finance and are not dependent upon, a Rio Tinto with Newton or any other strategic. And then that way we can control our own destiny. It's not to say that we won't look at doing strategic alliances with the right parties at the right time, but from a negotiating perspective, if you can control your own destiny when it comes to project financing, you put yourself in a much stronger negotiating position. Nick,
okay.
Any comments from you on that?
No, the only thing I'd add is there's no question that our capital will be materially lower than Ivanhoe. But the thing to remember as well is I haven't gone through the detailed Ivanhoe analysis, but we also believe we'll be quicker to market. In other words, we'll be in a production, we believe, at much sooner than our neighbors to the south of us.
Yeah, I mean, just on that, I think, Ivanhoe Electric is saying that they will start construction and development in 2016, which, for our go it alone plan is the year that we'll actually be producing copper cathode.
And speaking of your cathode, can you comment on any of the off-takers or agreements that you've put into place?
Well, first of all, the good news is there is no offtake at this juncture in time. So we really haven't entered into any of those discussions at the moment. We have been approached, but we feel that we need to complete the pre-feasibility study, look at the economics of the project based on reserves, which obviously comes out of a pre-feasibility study. And then as part of, project financing, that's obviously something that myself and Nick will actually be looking towards is, can we use an offtake potentially to assist with project financing? But it's a little too early to get into the details of that. Okay.
And can you comment on any of your byproducts, in particular moly, and do you have any strategy with that?
Well, it's a great question. If we were putting in a copper concentrator, then the gold and the silver and the moly that is in the system could be recovered in a copper concentrate. But at the moment, because we're putting in a heap leach with an SXEW plant, we cannot recover the byproducts of the gold, silver, and moly with that type of technology. We've got to go to a copper concentrator.
Okay. And what about royalties? Are there any royalties on the properties?
Nick, do you want to take this question?
Yeah, sure. There's a 3.18% royalty on the bulk of the property, not all of the property, but we also have an ability to reduce that by purchasing. We have an option to purchase part of the royalty back, in which case we'd be down to about the 2.6% level, which we think is manageable. We believe we'll wait for the economics to come out, but we believe that the economics will be quite compelling. And if that's the case, we will definitely move to reduce the royalties as soon as we have the opportunity to do so.
Okay, next question. Are you considering building a concentrator plant to optimize the extraction of the primary resource, copper?
Well, it's a great question. We've certainly did some, scenario planning around that internally. But at the moment, we believe the Newton heap leaching technology presents the best opportunity for us. And the nice thing about that technology, if it were successful through additional testing and eventually up to commercial scale, is that, the production of a heap leach with then a SXEW and a straight 99.9% pure copper cathode, it takes out flotation and then having a concentrate, having to ship that off to a smelter that generates a lot of greenhouse gases. And then from there, it has to go to further refinement. So it kind of defeats the purpose of, what are you actually producing this copper for if it's for the green energy sector and, to minimize, carbon fossil fuels, if you're then layering in all these processes that are just going to generate greenhouse gas emissions. So we think from a strategy perspective, Newton presents the best case for us at this juncture in time.
Thank you, George. Are there any ways to speed up the project? I've seen this question a few times. So somebody thinks you're slow, George. I think you're clipping along at a great rate, but that's the question.
Well, of course, there is a way to speed it up. I mean, on the back of the pre-feasibility study, if the numbers are robust enough, then obviously some form of mezzanine financing to allow you to start up an early works program is something that potentially could be considered while you still complete the bankable feasibility study and then do the full project financing, some 12 months later. So that is an option that's still on the table today. But until we see the pre-feasibility study and until we see how the markets are going to play out here in the copper space and whether the capital markets are even open for, a funding of that size, we can't really pin our hand on that at this juncture in time.
Thank you, George. And now a mining question. Is block caving the preferred mining method or is in situ copper recovery an option?
Well, at this juncture in time, we're looking more at a bulk mining method. If we look at Park Salier, I believe the published tons there in the resource is 130 million tons. And we know it's over 1% copper, which gives us about, almost 2.9 billion pounds of copper, of which 2.5 billion pounds is leachable. We're looking at some form of probably sub-level cave there, also with some long hole open stoping. The issue, first of all, with block cave is it takes a very long time to set up for a block cave. And of course, it requires a lot of capital development as well. And if something goes wrong, you need very deep pockets and a very strong treasury to be able to rectify it. So for ourselves, as a smaller company and obviously managing our working capital and cash, we believe sub-level cave and long-hole open stoping is certainly the way to go there. As far as in-situ leaching is concerned, we've spoken about that within the company. We don't think that technology has been significantly proven to a commercial scale. Obviously, Florence and Taseko, which is about 45 miles northeast of us, is intending to have an in-situ leach at Florence. I think we'll let them lead the charge on that. And over the next 5 to 10 years, if that technology proves successful to commercial scale, it's definitely something potentially that we could consider down the line. But today, all of our plans and submittals, as far as the PFS and eventually bankable is concerned, it'll be underground, more traditional forms of mining, drill, blast, and haul the ore to surface, crush and grind, agglomerate, and put it on a leaching pad.
Thank you, George. And Nick, maybe you can answer this question. We've got someone asking, is the PNAV of juniors normalized to the same copper price?
Yes, generally it is. The information that we provided came from an external source. And for the most part, when we do our comparative analysis, we definitely use the same copper price so that we're comparing apples to apples.
Great. One of the questions that's coming up is, talk to us about the critical metals sector and how important is that going forward? And I guess your company's positioning within that whole sector. I mean, it's obviously becoming more and more important.
Yeah.
But, when you're speaking to investors, you're not just a mining company. You actually are in the mix of geopolitical action that's going on right now?
Yeah, well, it's a great question. I mean, obviously, in the last couple of months, the Department of Energy within the United States has actually declared copper as a critical mineral. And just, in the spring of this year, Nick made a trip to Washington, D.C. to meet with various representatives of Congress and, high-ranking officials within various departments. And Nick and I will actually be going back our two selves in late October to also pay them a visit and get introduced to new parties. So again, thinking ahead to 2024 on the back of the PFS, once we have mineable reserves and we have a robust financial and economic model and a business plan based off of reserves, we believe that'll open up opportunities with these type of groups to talk about, how we can get assistance, obviously, from the federal government or various departments in low interest loans and or grants to move this mine forward. Because, as I said earlier, the demand for copper in the US is only going to increase exponentially. And we think mines like this are going to be highly prized, particularly in Arizona that has a mining heritage and history and already produces 70+% of the US domestic supply of copper. Obviously, where our copper goes into the actual supply chain will be important as well. We've had very high level preliminary discussions with end users of the product. And we definitely see an opportunity for the copper to go into, solar panels or wind turbines or electrical vehicle manufacturers. And as everybody knows that follows this story, there are 2 electrical vehicle manufacturers already in Casa Grande with production plants that are producing trucks and cars that are coming off the production line today. And I'm sure Rio Tinto as well, if we were to foster and grow that relationship, probably has a network of end users in the US that they could introduce us to quite easily that would take this copper.
Thank you, George. All right, there seems to be a gap between the targets set globally to decarbonize, yet the flow of capital into the resource development, which is what you were just talking about, to allow decarbonization to proceed, is lagging. Metal prices are lagging. Any thoughts or opinions on this?
Yeah, I mean, certainly, I think everybody at the moment is very short-term focused. And I don't think people are really seeing the forest for the trees. And what I mean by that is that we all know that in the last 2 to 3 decades, obviously China has really been the engine of the commodities boom, although it's been cyclical. And we know at the moment that the economy, is shrinking. The GDP growth is decelerating in China. They've had issues with, obviously, their currency. They've got issues in the property market that's a big driver for copper and steel, iron ore. But I think if you look medium and longer term, I think these critical minerals, it's no longer going to be about China. It's going to be obviously about China, but the rest of the world as well. And every country in the world right now is trying to position themselves so that they have control of their own destiny and they're not relying upon, other suppliers of these critical minerals. And I think, that's something that the pandemic showed. As soon as, the logistics chains were shut down, suddenly now, manufacturing and GDP, it all came to a grinding halt. And I think governments are setting themselves up so that they don't repeat that, or certainly the smart ones should actually be doing that. And that's why I'm so bullish and so grateful that we have a copper mine in the heartland of the US copper domestic market in Arizona, because the demand is certainly going to be there.
Awesome. And so we're at the top of the hour. I have one final question, and that is, what is the copper price you're considering for your PFS? Can you talk about that?
Yeah, we assess that every month. We have a list of approximately 50, banks, institutions that follow the sort of copper space. And we generally use that number as the consensus number that we build our models from. So I think last month that was sitting at $3.75 a pound of copper. I actually saw a report yesterday that was reporting that had moved slightly up to $3.79 a pound of copper. So if we can make this project work at, around $3.80 long-term copper price, I certainly believe in the next several decades, we're going to see copper prices significantly higher than that. But if the project economics are robust enough, it generates good returns, and we can project finance that ourselves, everything else really above $3.75, $3.80 is really just the cherry on the cake, so to speak.
And George, if I could just add to that, we'll take a conservative view with respect to the PFS. Keep in mind, as George pointed out, we're due to be in production in 2026. We have a very strong view that the copper price will be well north of the current price. But of course, we will still take that conservative view. But I think it's important for the investors to understand that as a management team, we believe we'll see a much higher copper price when we're in production.
Thank you. And gentlemen, one more question just squeaked in from one of your investors, actually. And the question is, what can investors expect from your drilling in the gap zone?
Well, we're drilling 3 holes there. So we would expect by the end of the year that we would announce the assays from those 3 specific holes.
Okay. All right. Let's see. All right. So that is it for the questions. All right, gentlemen, thank you for a fantastic update. You must have some very happy shareholders. We had a lot of people in the room today, over 85 at one point, which is pretty nice considering your neighbors had, I'm not saying their name, your neighbors also had their own conference call going on. So, we're at the top of the hour. Thank you for joining us today. And just a reminder that this recording will be available on the company's website as soon as we get it edited and send it over. And it'll be on all of our social platforms as well. And should you have any further questions from the company, please email them directly to Allison at adwoskin@arizonasonoran.com. And just a quick reminder to please fill out the quick questionnaire before logging off, because this helps us and the company to communicate more effectively with you. So thanks to everyone who joined us today. We look forward to seeing you at the next VID Town Hall Forum. Goodbye, everyone.
Thank you.